Hello, hello. Good morning, traders. Good afternoon, good evening for those in the southern hemisphere. Good morning, Stel.
Good morning, everybody.
All righty.
How are you?
Yeah, very good. Thank you. I hope everybody is doing okay. We're going to have a bit of a special today because our headmaster server of the Elliott waves is going to be with us today, Grega, giving us a little bit of his view on what he expects at the start of a new month, quarter. It's going to be very interesting. So stick around for Grega in the second part of our show. Don't forget to promote him whenever Grega is around.
Yep.
Oh, yeah. Okay. Right. As you can see my screen there, it's sterling, the proud pound. I think it's just because spring is here. We have our first day of real sun outside. I think people are very positive on sterling due to that. Right. Let's start over in Asia. And first of all, we had the RBA overnight. They were unchanged. They say they want to assess the tightening impact on inflation and economy of their monetary policy moves, latest monetary policy moves. They do see evidence of household spending slowing and saying that the financial conditions have tightened. But on the other hand, the labor market still remains tight. So what happened in the market is that beforehand, the market covered some Aussie short in the sessions before. We saw Aussie rally, but then it mainly on the cross side gave back just everything that it gained versus dollar. It still remains firmer than where we opened this month, but on the cross side, it gave back a lot. We will have a look at that in a bit. Then, yeah, China again sending out warnings against the Taiwanese president and her meetings in the United States. The warnings are getting a bit starker with every meeting that she has. It's not new, but we have to expect more, at least comments. But we'll have to be a little bit careful because yesterday or over the weekend, I think China sent some ships over into the Taiwan Strait and went over the median line. So we have to keep those geopolitical events always in the back of our minds. What else? Yeah, there was an article out overnight as well, and then in New Zealand saying that the signs of stress in the mortgage market and the arrears for repayments rose by 23% in February. And that is also keeping the Kiwi dollar, as we'll have a quick look at it, from really breaking above that 63. Tomorrow we'll have the RBNZ, but in the meantime, the New Zealand Institute for Economic Research came out with the business confidence, and that was also a negative number overnight. So I don't know whether the RBNZ is really going to have a lot of impact on the Kiwi, but I think there, since we expect 25 BPs, is going to be more a case of what they say than what they really do with the interest rates, in my opinion. We also had the ex-Bank of Japan Nakao coming out saying YCC should now be reviewed. It can't go on forever. The monetary policy easing side effects in bond markets and the yen have been somewhat distorting. So, but on the other hand, he also said that abandoning the YCC will come with some risks. So again, it's an ex-BOJer, and when he's not in the seat anymore, and they all those central bankers have a lot to say. But anyway, he's a guy, he's a well-known guy in Japan, and he's now calling for the end of YCC. On that note, in the yen, we have to acknowledge that the first two Tokyo fixings were actually yen seller. So where the market was perhaps expecting those Japanese lifers and asset managers coming out and trying to sell a few more foreign bonds and repatriate a bit of money. It's not at all what we are seeing right now, and that is the reason as well why dollar yen is not has not broken this 132.20 support, which I will show a little later, where the rest of the dollars is the major dollars are rather more on the defensive. That for Japan, and then we had some comments out of the Schlegel at the S&P saying S&P will continue to do everything it can to bring down inflation, including rate hikes and selling of foreign currency. So they really want to keep the Swiss franc in check. They don't want it to weaken, because a weakening currency is inflationary. So expect on decent setbacks in the Swiss S&P to come around, in particularly looking at this Euro Swiss remaining under parity. Any move above into those prior highs, 100.5, 100.75, may see the S&P come into the market. So keep an eye on that one and keep it in mind. And then the ECB this morning, the ECB consumer survey came out for February. And sorry, let me just shut up my squawk for a little bit. And they say that they see inflation continue to come off. The consumers see inflation continue to come off, but the rest is really a mixed picture. For the overnight news, that is about what I saw.
One more thing.
Yeah.
Okay, sorry. In case you're done with the news, basically.
Yeah, just the news, and then I'll jump over to the data.
Yeah. There's just one more thing I think worth mentioning. Holtzman of the ECB said that another 50 basis point hike is basically on the cards if the global banking system doesn't worsen in any way. So, oh, Grega's in. Hold on, where is he? I don't see it. Oh, attendees, there he is. I'm going to promote him. Yeah. So, I guess most central banks, and rightly so, are looking at the banking sector and how that's going to evolve. But if things remain quiet now on that front, then this guy is telling us that the ECB is going to be hiking 50. Or at least it's his opinion, he's...
Yeah, it's his opinion, and he's one of the uber hawks of the
yes,
right? So we have to take into account who is talking and when, but we know, yes, that Holtzman is really one of the uber hawks, and he's still continue to push for higher rates.
Yep.
And you know what? I mean, when he came out yesterday saying that the euro rallied just 10 points, then we had a bit of a setback. I don't know exactly. Probably people taking profit again in this 109 zone. But the fact is that we are back above 109 and into those resistances in the euro dollar again. But we'll come to the price action a little later. So let's move on to the data. What have we got? I think the main one was yesterday. Yesterday we had all those manufacturing PMIs, bit mixed, I would say, but the main one coming out in the States yesterday was this ISM. You guys see my data screen, right?
Correct.
Yeah. Okay. So the main one was this ISM. The dollar got a little knock on the head there. Globally, really, dollar yen went below 132.5. Euro dollar, that's what caused the move above 109, and cable also pulling higher. So it was a bit of a global dollar setback. We also saw the antipodians then trading pretty beat. On the rest of the data. We saw the monetary base shrink in Japan, where it was expected to actually expand a little bit, and that sent the JGB yield back to very close to the 50 BPs line. But really, the move was undone by what happened an hour later on the Japanese fixing. So, but keep an eye on that one, and also. that's going to be one of the discussion points going forward once Ueda takes the helm of the Bank of Japan in a little less than a week. I think this weekend, right? The handover, I think is the 8th and the 9th. So from next Monday, we'll probably hear from Ueda. Aussie decision done. The German trade balance is okay. It's a little less in positive than it was expected, matching the prior ones, but where it's a pretty decent number as well, it's because the activity has risen here. So it's, when you look at the trade balance, there's the headline number, but then you look at the exports and imports, the details of it, and they both went higher. So that's positive for the activity levels, and that is probably also what supported euro a little bit this morning. The Spanish unemployment data were pretty good as well. The Spanish unemployment change, and so when it's a negative number, it's a good number. So the Spanish unemployment change is pretty good this morning. And then we had the PPI out, the Eurozone PPI out, a little lower than expected, but it's still February, right? It's still the Q1, but still we see that in Q1 the inflation data remained quite sticky on that front. And that's for the data. What are we looking at this afternoon? We will have the durables. I'm not sure. Let me quickly check. Is that a final number, or a quick check on those? I don't see whether it's a final number or not, but anyway, we have the durables out, and then one that has the potential to make things move a little bit are those job openings. We did see a few articles saying that they may be overblown, but let's see if we see any more corrections in those data. Come out much lower, and I think it could give another shove to the dollar lower this afternoon, especially those two majors, right? In the euro and the sterling, they look to be really the flavor of the day. So keep an eye on those ones. If this JOLTS opening number comes out lower, if it comes out a lot higher in turn, then I guess the dollar should at least stabilize a little bit. And then we have a few more speakers out later on. We have Cook and Rosengren out. We also heard from Tenrero just a couple of minutes ago, and her dovish self was saying that she would vote for a little bit looser monetary policy now. That we've got enough in the tightening cycle, she was saying. But we have to know that she's always been one of the most dovish Bank of England members. Yeah, she was saying like cannot be complacent, but inflation is likely to fall well below target in the future. And yeah, she basically says that they've done enough. And that's it for what the data is concerned. Have you anything else you wanted to discuss?
No, you covered the data. It's no, I mean, all we can talk about now is market action, which is a bit of yesterday's continuation, basically.
And speaking about market action, so we've seen this setback in after the OPEC Plus decisions. We've seen this setback in all those dollar pairs in Asia. But then since yesterday morning, I've got the impression that well, first of all, it's seasonals. The market is looking at April as seasonally being a very positive risk month. Sterling being for a while now a risk currency, it's benefiting. Then add a little bit to the fact that those much higher oil prices, the market seems to have woken up. Some dinosaur seems to have woken up, and taking the UK as an oil country again, and we reckon in the rooms that may have played a role as well in what all this sterling move is about. The thing is, I've been saying, and over this show, over the flow, over the face, or in our room, that I thought that sterling looked a little bit more dynamic or elastic than other currencies, and I've been positive. Also said it on Face yesterday for the sterling to start this month, and it didn't have to wait for long, really, for it to happen. It's really we can call it a rampage. We've done 240, 230 points from our yesterday's opening. That is already a decent move. If you look at it from the more medium term, I know people have in our room, they have some target numbers in the 125s, where we are now, anywhere between figure 40, figure 70. But if you really look at it from the more medium term, I don't see a lot before 126s, 126, 126.60. And then there's this trend line here coming in from those 140s highs that we saw back in 2021, which also comes in around the 61.8, around 127.60. I'm not saying it's going to go there in a straight line, but when the sterling starts, it has less liquidity than, for instance, the euro dollar. We have to be careful for counter trading this. On the other hand, if we start to move back below 124.40.50 now, then it I have to thank you very much, Mike. I have to move back onto the chart. Thanks for pointing that out, Mike. I thought I was showing the chart. So we moved above this this triple top also in the past. This has been a line of resistance. So what I was saying on the daily, I don't see a lot personally before 126.60, and then I have this trend line coming in here from the highs, which is also corresponding to the 61.8 around 127.60. As I said, I don't think it's going to be a straight line, but for as long as this 124.40.50 holds now, this is a possibility that we can't exclude. Below 124.40.50 in the short term, anyway, this is going to look a bit of a failure, and then we could have a setback. Why not even back into the 123s before perhaps retaking the higher path. But we also have to look at what's going to happen with the dollar this afternoon. Yeah, there's always two sides of a pair in the market, but for the time being, this is looking very bullish, and it's helped by the other pair, which is actually trying to break higher, the euro dollar, but then we see euro sterling coming off as well. We've been in this 87.75, 70.80 to 88.10.15 with that little spike around 88.25. We have been in this range for a week, basically over a week, and now it's decided to break down. So it's really sterling carrying this whole move rather than just being a dollar selling market. We have to look at what's happening in the low 87s, and then if ever we come to test it, this is my do or die zone. Although the channel says we could go lower, but this really is somewhere. I've been highlighting this zone for a long time already. I think if this breaks below 86.85 figure, there's going to be another mess in this euro sterling. But in the meantime, we'll have to respect that one. I'm for one. The room knows my position, and I'm looking to gradually wind down into this zone, because I don't know whether really we have the strength of going much lower. We cannot forget that ECB has still also mentioned ECB members, the more hawkish ones, are still trying to push for another 50 BPs high. So euro dollar then, On the more medium term, we have those two trend lines coming in here. First tryout, we capped over there. Second one as well, then we came back down. That was yesterday. But now we are trying to make a move through. I think it needs a confirmation through 109, 50, 60, call it, to really go and retest what's happening above 110. If ever, though, we go through this prior high, this could be on the way to 112s. But first things first, let's see what's happening this afternoon. The dollar may have a say in the events, of course, as well. On the downside now, if you would have rejections again, keep an eye on, in the very short term, what's happening around 108.85. Goes down below 108.85, then we could land again into this 108.35.50 zone, or even go down to the bigger 108, 107 3/4 zone. So that for the majors. I have to mention what's happening in the Norway before I hand over the screen to Grega. So this Euro Norway for a starter. So we have seen the Norwegian kroner pick up steam, bit of strength when the OPEC Plus sent Brent much higher. But we are still in this strong upward channel in the Euro NOK. So keep an eye on what's happening around 11.20. We gave it a try yesterday, and it's still holding. So in the Euro NOK, we need to respect it. But then if you look at the dollar Norway, that thing has, in my opinion, broken now. That has broken the channel here, which was around 10.35-ish at the time of the break. We had this little support zone here as well with the prior low around 10.30, and it's trying to get down there as well. So if we start to cap this 10.30, 10.35, there's probably another at least 1.5% to go before really we stabilize. But keep an eye on this one. If we start to move back above 10.35, 37, the party may be over. But of course, it's Brent and gas which are going to tell us what to do with the Norwegian kroner. Don't forget that Norges Bank is also still selling Norwegian kroner every day. And I think that is it for the main moves. I'm just going to show what happened on the Tokyo fixing, because it's interesting enough, right? So we had where was it? Yeah, of course, yesterday there was this gap we had in from the OPEC. But then look at what happened on the Tokyo fixing. We had this little spike here on the fixing, and then especially what happened overnight. If you look at it, this is it's GMT, right? Until really the Tokyo fixing, we were trading at the lows in the dollar yen, and the Tokyo fixing really put it right towards the 10 highs of the day. So really keep a close eye on what's happening in the Tokyo fixings at the start of the new fiscal year. Right. Without further delay, unless Tel, you have something that you really want to mention before we hand over to Grega?
No, not really. Let's bring Grega on. He's here. So
yeah, okay, great. Grega, are you with us?
Hey guys, how are you?
Hey.
Welcome to the show.
Yeah, so you steal the show to Ryan, huh?
No, you're not stealing anything. And we are not stealing anything. Ryan decided to leave us in the cold, so you know, we have to do it, right?
Yeah, sure.
Grega, take it away whenever you want. So come in and show us what you've got.
Well, I have plenty of stuff.
Oh, that's great.
Yeah. So as you know, we clearly are in a risk-on mode while the US dollar is selling off. But we are not seeing that strong move to the downside on US dollar, especially not versus Aussie, for example, or some of the commodity currencies. However, I still think that S&P 500 in general is in consolidation here, that should be, in my opinion, broken to the upside. I'm looking for the minimum upside projection here back to these August levels from 2022. It's a triangle here, which is actually pointing to the upside. So let's say that by the end of the week, we still should be a little bit more careful with the current risk on flows. I think that these current moves, especially when they start very significant, going into the new week, this could slow down in the second part of the week, especially ahead of jobs data. Also, at the same time, I would pay attention on these weeks known as fear index. Keep in mind that each time when we have reached these levels that we are currently just testing, like back in January 2022, April, actually exactly 1 year back, then we had August levels in 2022, December, January, and now again in April. Okay, so it means that looks like that market is very optimistic that we will see further upside. So we are already seeing that a lot of media calls that we are back in a new bull run here, especially with Fed maybe stopping the rate hikes. But looking at this week's index, I'm just aware that maybe we are going to see this kind of a pullback or just minor retracement or slowdown before we eventually break the highs here from earlier this year. But overall, it's definitely a current risk on mode that could continue, as I said, maybe towards the end of the April. We could already be trading at these levels here at 43.30. Also, we have crude oil that is making some very nice move to the upside. Now, firstly, if you look here on a daily chart, we've been talking and we've been tracking this bearish sequence for a while. I even highlighted this in detail in a week ahead video. It was 3 weeks back or so, when we were tracking this bearish price action, but we were seeing prices in a fifth wave. Okay, it's very interesting that market actually stopped at this very important pivot level around 64, which are also the swing support levels back from August 2021 and November 2021. Keep in mind that around that prices, okay, around $67-70, that was always significant level, because that's the prices where White House was announced actually back at the end of 2022 that they are going to fill their reserves. But before this move to the downside occurred, well, the Biden administration said that they are going to sell the 26 million barrels of crude oil from their reserves. So obviously they wanted to fill their reserves at lower prices. And so far we are seeing a very nice response from that area. Now, based on the Elliott wave perspective, it's not a surprise, because after this consolidation and following with this breakout, of course, everyone has seen bearish trend to resume. And normally when something is overcrowded, we just have to be aware that maybe higher degree trend is coming to an end, and the opposite will occur because it's not expected from a crowd. So what I'm seeing, this is a very interesting and strong reversal that could potentially last for a longer period, because we are, after all, expecting a free wave rise. For now, we are around 84 to 84 resistance area. So that's the region where wave A could potentially slow down. But generally speaking, it's the beginning of this wave B, which in my view could even extend towards 90 or 100 area still this year.
Grega?
Yeah.
Little question on that oil. What's the level you think needs to hold now for this move to unfold? Or what's, in other words, what's the level where we say like, oh, this may be
that we are
the end of the party?
Yeah. Okay. So I will talk about this on this 4-hour chart. Okay. So if we think we are in a new sequence, the bullish sequence, then this sequence should be made by 5 waves, right? And if you look closely here, so far that's wave 1, you had a wave 2, nice extended wave 3 with this breakaway gap. So if you think we're in a new impulsive phases, then more upside should be seen after this wave 4 pullback. But this wave 4 should never trade then into the territory of a wave 1. So 71.60 is the invalidation level. So as long as we are above 71.60, I think that this uptrend could resume. Also, keep in mind that we have this gap. Now, usually when these gaps are opened and not filled in the first 24 hours, they can stay open for a few more days. And ideally, after some more extensions here to the upside within wave 3, this gap will eventually be filled after this wave 4 pullback. And we know that when gap is filled, firstly, they act as a magnet, but then they actually cause the opposite reaction because of unfilled orders in this region causes a new flows. So in my opinion, whenever this gap is going to be filled, we could potentially see a new leg to the upside. So for now, this move to the upside is pretty extended, maybe a little bit too late to look for any longs. After all, that's been what, almost 20% move or so from the lows. So clearly, if anyone want to look for any longs here, I would definitely rather wait on something lower here at the better prices. So definitely this gap, whenever it's filled, I think could be a new interesting potential support zone for a new push to the upside. So Cayman, like you said, based on your question, 71.60 is invalidation level. So as long as we are above that, I think that this crude oil is in uptrend. Now, when it comes to crude oil, of course, we know that CAD, Mexican peso, and NOK are usually doing very well. And if we look here, firstly on dollar NOK versus crude oil, we can see that finally dollar NOK is now trying to break here the previous swing high. So the correlation was pretty tight, but obviously volatility is not that not that impressive here on dollar NOK. But I still think that if crude oil is really going to see more upside after the next setback, maybe that could fill the gap, the dollar NOK could also, I should say, NOK should also stay in uptrend. That's the dollar NOK inverted chart, by the way. If you look here, also some technical stuff, potentially this could be the right shoulder top. You have also the broken trend line, but it's not easy to say that there is a head and shoulder top formation unless you see a decisive break below the neckline. So whenever it comes to minimum expectations, I would be looking towards the neckline to see if at least retest this neckline. Then let's wait and see if the market really forms the breakout or no. So at least in the short term, or maybe for the next 2 weeks, I think the dollar NOK has plenty of room for more weakness while the crude oil is in uptrend. We also have dollar in bearish mode because of the risk on flow, so that's definitely supportive for NOK. But of course, the best mover usually, as you know yourself, Cayman, because you're trading this one a lot, is Mexican peso. I think that this one, if you look here on this chart, higher degree chart, is still bearish. We have recently seen a retest of this upper trend line resistance, and at the same time, this resistance line held when the crude oil bottom around 63. That's the same time. So I think that dollar Mexican peso, in my opinion, is staying in downtrend and could easily extend much lower towards 17 target, in my opinion, while the crude oil is in uptrend. Looking at this wave 5, because again, keep in mind that we are in impulsive bearish sequence. So again, the structure should be made by 5 subwaves. Now, currently, if you look here at this wave 5, that's the motive wave. Okay, it should be made by 5 subwaves. And if you look closely here, from that recent swing high, we cannot count 5 waves down yet. So it means that this trend is probably going to stay bearish. But of course, it's not easy to make any new shorts here whenever market approaches a new low, because we know that market at these important levels could stabilize. So how I would play this is wait on a decisive break of that low, potentially to see an extension even lower for a wave 3 towards maybe 161.8% target, which is around 17.4, and then wait on the bounce to catch maybe wave 4 rally for a new shorts, which could later on then stop at this resistance. Because remember, the downtrend could stay in play and it's valid if the previous low is broken and then the same low act as a resistance. right? So this could be something that could unfold here on dollar Mexican peso, but of course, I want to see slightly more extended wave 3 before I can look for potential resistance for a wave 4. But generally speaking, I think that this downtrend could easily extend much lower.
So, and your level of resistance in the immediate future is around what is it, 1827?
1820, I would say.
Yeah, it's around the level I was looking at as well, right? Okay.
But if we would rally, let's say, again, as we said earlier, wave 4 should not trade in territory of a wave 1. If we break this 1840, especially on a really close basis, then I think that maybe this wave 4 will become a little bit more complex, but still it will be part of the higher degree downtrend that, in my opinion, should resume.
Yeah, all right. Thanks.
Now, also, we have obviously stocks turning to the upside. Japanese yen is making some very strong reversals that could, again, looks like that we bottomed, at least temporary. So again, if crude oil is an uptrend, CAD could do well, especially versus Japanese yen. Now, if we look firstly here, again, that's the perfect 5-wave move to the downside, okay? So this 5-wave move, since market reached a new low with the spike and then a reversed higher, I think that this 5-wave drop is now finished. And always when you have with these 5 waves, you can expect a 3-wave correction because market obviously never just moves in one straight line. So there are also few steps forward, 3 steps back. So for now, we are in this corrective stage. It could extend much higher because you are in the only first leg of this 3-wave recovery. Now, normally you will see whenever you have this extended wave 3 within this previous 5-wave cycle, that price can retrace back to the wave 4 termination point. And that's around 100, 101 area. It's the perfect round figure as well here, some psychological level. So I think that this one could be seen in the next few weeks. Now, for any potential longs, again, I would wait on pullbacks to unfold. If they unfold, I would not be chasing markets up here. Potential supports could be here when looking back at the previous swing high around 97. Above that, you have this 97.50, this minor 4th wave. But the whole this region here could be very attractive if we see obviously a pullback here. Also, let's take a look on maybe on gold. Have it. Yes. Okay, so we are seeing gold in uptrend, and I think that all-time highs could be seen because I really like how the price action itself unfolded here in the recent weeks. We have seen a decisive break here above that resistance around 1800, and then we made all the way pullback here back to this same level. So weak hands were most likely taken out from this market, and what happened later on is that same level caused a very nice move to the upside. I really like the fact that we were able to break the previous swing high from this year, and we are now consolidating above that high. So in my opinion, this represents a very good and good consolidation above the strong support here. So when looking at the 4-hour time frame here, notice that this looks like a healthy consolidation. You have a very strong move to the upside here, very strong move, and then a pause. Okay, so this kind of a pause, whenever you cannot count 5 waves down to the 5 waves from the top, it means that probably we are just consolidating. So I think that there is room for more upside. Potentially, if we can pass 2000 level finally, we could easily see this 2050. Also, of course, because the 2000, it's a very important level. There is a bull bear fight around this figure, so it's not a surprise actually that this consolidation could take a little bit longer before it's really finished. But generally speaking, I see this as a wave 4, so I think that more upside could be seen. If suddenly, let's say that in the next 2 days, we erase yesterday gains and break the 1950 level, then I think that support could be around 1920, 1930, but still very good support for this uptrend to resume. Also, if you look at gold COT data, we've been sharing this one at the end of last year. And I've been talking that back then, large speculators were moving into some extremes with their shorts here. And actually, it was the same reading, similar reading compared to back at the end of 2018, 2016, and this was, I believe, the end of 2013. Okay, so whenever these large speculators were short, market later on obviously turned around. And now what we are seeing is that they are increasing their longs, but still not in that region that we have seen back in 2016, and that was here 2020. So in my opinion, there is still room to load even more longs here, and this could easily take price, in my opinion, back to these all-time highs. So that's another supportive indicator for gold in my view. Also, gold silver ratio, I'm sure that you talked about this a lot in FACE last week. This one is finally breaking this trend line and looks pretty aggressive to the downside, and normally that's a very nice and bullish indication for metals in general. So of course, in that case, means that silver could be much better rather than gold, but obviously both are at least now look to be an uptrend. So looking at silver, we are testing this trend line resistance of this channel, trying to break out here. Again, a very strong move from that after that dip. So I think that we, at least for the next few months, we could see 27, in my opinion, but we could consolidate a little bit longer here because we are at the major trend line. But that's definitely, my view, higher swing low formation that could potentially successfully cause this breakout. Also, let's take a look maybe on pound. Now, cable here is breaking higher after this wave 4 setback. That was a flat formation. So keep in mind that you are now in a fifth wave when you look at the whole structure here from this capitulation week back in September. Okay, so you have waves 1, 2, 3, 4, 5. And as I discussed earlier, after 5 waves, market could slow down. We don't know where exactly this market could slow down. It can be around 1 to 6 level, where you have 61.8% pip of an extended wave 3 measured from end of a wave 4. So that's the first target. Or could be around 1.3 level, where you have this wave 5 that equals to wave 1. The whole area up here is definitely will be very important whenever we trigger it, this yellow square. So I know that maybe some optimism regarding pound could now increase here, but again, whenever this happens, just keep in mind that maybe we are approaching some serious resistance. But generally speaking, I'm bullish on pound. I'm just aware that maybe some corrective stage again could unfold, let's say, through summer months. Okay, nothing moves in a straight line. So
yeah, no one's ever got hurt, or no account has ever got hurt by taking some profits when you see a nice move and you're riding the trains, or as you say, and as we traders from longer term already say, the market rarely moves in a straight way all the time. It sometimes does, but it most of the time does not, right? Yeah,
definitely. So at new lows, new highs, if you're short long, that's definitely an important area where you should consider to tighten stops if not going out. Okay, so that's for me.
Yeah, Grega, I don't know. I know you usually don't do short-term analysis, but we have a question there asking if you would care to have a look at the short end of the dollar yen, if you're seeing anything specific.
Yeah, sure. Yeah, sure. So dollar yen, in my opinion, is bottoming for now in the short-term picture. But just to give you this brief outlook on the longer picture, I still think that US yields potentially could be headed even lower. So this could keep dollar yen in downtrend. But for now, it looks like that we are trying to stabilize is to a pretty important level around 130. And if you look here, I can count potentially 5 waves down from that 138 level to 130. So these 5 waves down, it's overlapping, but it's a leading diagonal. Okay, so this is a wedge formation. So even if you ignore the wave count itself, what normally suggests that wedge formation, whenever it's finished and the other side is taken out, then it means that market could reverse or even erase whole of the wedge formation. So in such case, there is room for 135. And why I think that this level is very significant is also because it's the 61.8% level of that drop. Also, if you look at the short-term structure here, well, we can count 5 waves up here from that levels here, from that lows around 129.60. So these 5 waves up suggest that market has bottomed here, even if just temporary. So after these 5 waves up, you would expect a 3-wave correction before the uptrend resume. So I think that we are in a wave B. Very nice support for this dip would be around 131.70, and a little bit lower you have this 61.8%. So this area here could be potentially very attractive. But I'm not sure if I would be looking to buy dollar versus Japanese yen. If I think the dollar yen is headed higher and you have commodity currencies headed higher, then maybe it's somewhere else on yen crosses. It's a better place to be.
Yeah, and I agree with that. There's potentially better currencies to be long. If you want to be short yen, there's probably better currencies. Exactly. If you want to be long yen in turn, then perhaps the dollar yen is the one to look at right now. But yeah, as I said earlier in the show, I think it's also very important to see what Japan is doing with their own currency. They can create the moves and complete the pictures we are looking at.
When they are having a new governor from Bank of Japan this month, right?
Yeah, they are doing the handover next weekend, if I'm correct, from the 8th to the 9th. So next week, Ueda will be in the seat.
Yeah, this could be very volatile.
Yeah, could be getting volatile, and then we're going to have the Bank of Japan at the end of the month, the first meeting. But I trust that we already will have some initial comments, at least when he takes over from Kuroda. Perhaps already in the weekend when they do the official handover.
Yeah.
Yeah.
Okay.
Grega, thank you so much for being part of the community, the family, and coming on our show today. I'm sure that everybody found it absolutely very interesting. And I think we are going to call it a day here. So people, thank you very much, as usual, for coming to our show. Keep an eye on what's happening in the markets. They're on the move, even on a day that we would or could have expected being a little bit of a transition day. It is moving. So keep your risk in check. And we want to hear happy stories tomorrow. Thank you, everybody, for joining us. Thank you, Stel. Thanks again, Grega.
Thank you.
Thank you, Grega and Cayman. Thanks, everybody.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.